Microsoft is trading at over $500 and I'm still buying it. Look, I've heard it all, right? Too expensive, too late, priced for perfection. But here's the thing, Microsoft just dropped $80 billion into AI and still pulled in over $25 billion in pure profit last quarter. Azure is growing at 33% a year, and Copilot, well, it's embedding itself across the entire ecosystem, and Microsoft's got a $3.7 trillion valuation, chasing $4 trillion very fast. But I'm not blind. High capex can crush free cash flow, and regulators they're circling, especially around their OpenAI deal. I'll show you the one signal I'm watching that can flip my thesis. I'm Rick Orford, and I've been trading since 1999. I'm not a financial advisor, which means I'm not trying to sell you annuities, bonds, or any beachfront retirement fantasy. I don't do hype. I'm going to break down the numbers so you can make smarter, more confident decisions with your money. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. And you all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by almost 6 times. Go to fool.com/RickO to get your 10 stock picks right now. Microsoft is a powerhouse in the technology industry. The company specializes in cloud computing, AI, productivity tools, gaming, and enterprise services. Today, Microsoft dominates over 70% of the desktop operating market, and there's a big chance that you're using or have used at one point one of its products. Today, Microsoft has diverse key business lines, including Microsoft 365, LinkedIn, Windows, and Xbox. Microsoft also maintains a dominant position in its enterprise clients. For example, it just signed a 10-year contract with the London Stock Exchange for its Azure services. As for the stock, it currently has a consensus strong buy rating from 46 analysts, a sentiment that has increased over the past few months. Microsoft continues to attract headlines due to speculation that it'll be the next company to reach a $4 trillion market cap. Now, NVIDIA recently reached a $4 trillion market cap, and Microsoft, well, they're right behind. This is backed by the company's evolving business model and existing solutions. Also, analysts have set a 12-month high price target of $626 for Microsoft, suggesting an upside of about 24.4% from the levels at the time of recording. These predictions are not just hype, but rather a firm conviction for Microsoft's AI and strong financials, and this piques the interest of most investors, like me. Speaking of strong financials, let's see how Microsoft performed based on its reported numbers. In its most recent quarterly financials, Microsoft sales rose 13% year over year to $70.1 billion. This increase was also reflected in its net income, which jumped 17.7% from the same quarter last year. Now, net income is basically a company's total profit, whatever's left over after paying for salaries, rent, materials, interest, and taxes. It also includes non-cash expenses like depreciation and amortization, which reduce reported profit and help lower taxable income. But net income doesn't tell the full story of a company's financial health, and that's where free cash flow comes in. FCF shows us how much actual cash a company has left over after covering the essential costs to run and maintain its operation, including taxes, capital investments, but doesn't include non-cash items like depreciation and amortization. Think of it like your own job, right? After earning a paycheck and paying for things like food, gas, and the bills, the cash you have left over is your free cash. For a business, the concept is very similar. After earning money from operations and investing in necessary upgrades, called capital expenditures, whatever left over is the free cash flow. And I think FCF is an important number because it reflects how much real cash a company can use to reinvest, pay down debt, return to shareholders, or build cash reserves, making a key metric that investors will love to watch. Now, going back to Microsoft's financials, the company reported free cash flow of $46 billion, which is down 9.3% from the previous year. And this decline was driven by higher capital expenditures, despite solid operating cash flow. Still, you can see that the company has huge margins that can be used for dividends or any other investments. Microsoft currently pays a forward annual dividend of $3.32 a share, which translates to a yield of approximately 0.66%. But nobody's buying Microsoft for their dividend. With technology and momentum seemingly side with Microsoft, the question is, can Microsoft continue its run and meet investors' expectation and price targets? Well, let's look at some of the reasons that can make that happen. If you're an investor or someone planning to invest in Microsoft, I think there's lots to be excited about. First, Azure revenue is growing at around 33% per year. Azure is Microsoft's solution for computing, storage, networking, analytics, and AI. Given the momentum, Azure alone can generate a huge chunk of Microsoft's income when the AI market grows according to expert expectations. Currently, the AI market is valued at around $200 billion, expecting to increase by at least 4 times by 2030. Microsoft is a known supporter of innovation. The company is famous for its early partnership with OpenAI, the company that launched ChatGPT. Microsoft and OpenAI have been working together since 2019, and they recently announced that the contract of this partnership is extended until 2030, sharing OpenAI's IP and revenue. Third, Microsoft is heavily committed to improving its infrastructure. Companies like Microsoft, well, they've maintained their dominance not just out of luck, but by investing in the foundations. For example, the company announced a regional expansion in Asia, which is expected to bring new revenue stream with an initial value of $21 billion in 2025 alone. These 3 reasons will significantly impact how and when Microsoft will hit that $4 trillion market cap with the stock trading above $600. And actually, this is a question that come up on my Discord channel, and I think it's definitely possible this year. That said, there is something that I might call speed bumps that could impede Microsoft's momentum. First, Microsoft is on track to spend approximately $80 billion on its AI technology for the fiscal year ending in 2025. This high capex is justifiable as long as it continues to generate profits. However, Microsoft's high capex can backfire if this growth slows down, especially if it's a result of rising competition in the industry. And of course, second is the potential regulatory scrutiny that may involve the OpenAI and Microsoft deal. The Federal Trade Commission is looking into possible antitrust practices tied to bundling AI, cloud, cybersecurity, including Copilot and Azure. US and European regulators are concerned that Microsoft's product integration creates unfair barriers for smaller AI or cloud vendors. It's also worth noting that this is not the first time that Microsoft has had problems with the FTC. In 2023, Microsoft agreed to pay a settlement charge of $20 million for violating COPPA by keeping and illegally retaining its children's user profile information that signed up to its Xbox gaming system without their parents' consent. All this aside, I think these risks are manageable, especially as the company is backed by robust technology and consistency. However, despite its strength, any slowdown in the AI market or heightened regulatory scrutiny could pose challenges to its growth. Now, let's analyze Microsoft's valuation and see how it compares to some of its peers in the Magnificent Seven. Other than NVIDIA, which is the only company that is above Microsoft in terms of market cap, well, Microsoft trades at a premium relative to its peers. But I think it's justified. I mean, the valuation suggests that the market expects strong future earnings growth, which today is featured by the company's dominance in AI, cloud computing, and enterprise software. So If you're someone who's looking for long-term growth and stability like I am, Microsoft, it's hard to beat. Just think about this. If you had invested $10,000 in Microsoft 10 years ago, well, today you'd be sitting on over $100,000 today. That kind of growth doesn't just happen, right? It comes from a company with a strong track record, visionary leadership, and a clear focus on the future. With its momentum in AI, cloud computing, and enterprise tech, I truly believe that Microsoft is still a great buy, even at a premium. Microsoft is the kind of investment that rewards patience and vision. So yeah, I think Microsoft still has massive upside, right? Especially with its Azure and Copilot that's accelerating its revenue and its profits. But there are some risks ahead that could cause some short-term volatility. But over the long term, I think investors will be very pleased even if they got in at today's prices. But what about you? Are you buying or avoiding Microsoft in 2025? Let me know in the comments below. And while you're there, if you found this video helpful, don't forget to like and subscribe for more. Thank you so much for watching, and I'll see you next time.